Bitcoin has just reached a pi cycle major resistance, and it has done this for the first time in this cycle. But if we look to the previous historical revisits of this green moving average, we've seen multiple rejections, at least a strong rejection on the first time of asking. So is Bitcoin going to break beyond this resistance, or is it going to reject? Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So you can see here 2012, 2013 overextension beyond this green moving average before getting rejected. Over here, a rejection after we revisited this green moving average for the first time in that cycle, rejection, and then two more rejections came over here. And then, of course, you see overextension beyond this green moving average right over here before a rejection. And then in this 2020-2021 cycle, we saw rejection from here as well, but it didn't prompt too big of a retrace. This rejection wasn't actually a strong one, but we broke beyond there, overextending towards the upside and going to new all-time highs. So we are at this resistance right now, the major one, the last major resistance before new all-time highs and price discovery. Does Bitcoin break beyond here, or does it reject strongly like it has many times in the past before? Or is this a different cycle, and are we actually going to get this sort of rejection in the short term, but ultimately seeing Bitcoin break to new all-time highs going forward? Currently, you can see that we are overextending just a little bit beyond this major resistance. For the first time in this cycle, we have revisited this green moving average, which is the 350-day moving average multiplied by 2. This is something we were talking about in the previous video. So we are currently at this resistance, and does price overextend beyond here? Because right now, actually, 67.5 is this resistance, and Bitcoin has already rallied to 69k, making a new all-time high for the first time in this cycle, which is a historic event. But historically, we have also seen loads of overextensions beyond here before rejection. So the key thing here would be for Bitcoin to reclaim 69 as a new support in order to springboard higher, because in the past, we've seen that if we don't form a reaccumulation range at these highs or reclaim this moving average as a new support, then potential upside wicking beyond here followed by a pullback is a possibility. This has happened multiple times in the past, and in fact, we can move on to this chart right over here. We are right now at the 350-day moving average multiplied by 2 right now, rejecting in the very short term, maybe even overextending beyond here. But we can see, looking to these historical rejections from this green moving average, and in this chart it's blue, we've seen rejections. And if we focus on the 2012-2013 one, 51% rejection in 3 days. Here, 40% rejection over a period of 45 days, and 72% rejection in 261 days. Now let's talk about this current rejection, and let's talk about the possibilities and the likelihood, because if we focus on this rejection, for instance, I don't think this is going to happen. I don't think this rejection is going to happen, and here's why. This, number one, wasn't a rejection from old all-time highs. In fact, we formed a lower high, a macro lower high, after initially rallying for the bear market bottom. And number two, this 2019 rejection, that's a candle 3 in the 4-year cycle. So this is the pre-halving year, because if you focus on candle 4s, this is a halving year. Each candle 4 is a halving year, and you can see how each candle 4 always breaks beyond the 4-year cycle resistance, this black horizontal resistance that rejects price for 3 years at a time. And on that halving year, we break beyond here and rally to those new yearly highs, and sometimes even new all-time highs. So in this cycle, we saw new all-time highs. In this 2016 cycle, we didn't see new all-time highs, but we're already seeing it in this cycle already. We've rallied to new all-time highs very recently. So this rejection right over here, not gonna happen. Very likely it's not gonna happen, as this was a pre-halving year, and also we didn't reject from old all-time highs, because right now that's what's happening. We're slowly rejecting from old all-time highs. We've made a new all-time high. So it's the final resistance before price discovery, really. So very different. This is a halving year. That was a pre-halving year. Very different circumstances here. If we look at this rejection, for instance, this right over here, we see a rejection from this green moving average right over here. It's actually a blue one, but on the chart that we spoke about earlier, it's a green one. This rejection here, notice how July 2016 was when we saw the halving event. So we actually saw a rejection from this moving average just before the halving event. So 40% in 45 days. And as you guys know, we've been talking about this for a long time. A pre-halving retrace tends to occur a few weeks before the halving event, and this is the pre-halving retrace of 2016, and this is the pre-halving retrace that we've been talking about in previous videos, and it was a retrace of 40%. Now in 2020, you can see that the pre-halving retrace occurred somewhere around here, and this was 20%. And then afterwards, we rallied simply to new highs and formed a reaccumulation range briefly below this resistance and then broke towards the upside. So the pre-halving retrace in 2020 was 20%, and here it was 40%. And in previous videos, I spoke about how a 40% pre-halving retrace was simply going to be very unlikely. The conservative stance for a pre-halving retrace would be around 20%, at best 25-30%. The conservative stance would be a pre-halving retrace of anything up to 20%, like we saw in 2020 before the halving event. But it's very interesting to see that this 2016 retrace was 40%, and it occurred after slightly overextending beyond the moving average in question, the pi cycle moving average in question, before we saw that pullback just before the halving. So this pre-halving retrace, number one, is a milestone that tends to happen, a pre-halving retrace. And number two, this is confluent with a rejection from the pi cycle moving average. On the first time of asking, we tend to simply reject from this pi cycle moving average. So out of all of these retraces right over here, this retrace, and this retrace, this one seems to be most likely. However, I don't expect it to be a 40% retrace. I don't expect it to be that deep. And theoretically, this pre-halving retrace shouldn't be occurring right now. It should be occurring in the next 3 weeks or so. However, you can see here, this is a macro lower high relative to old all-time highs. So still also very different. This was a halving year, just like we are in a halving year right now, but we're rejecting from the final major resistance area. Whereas right over here, we were rejecting much lower than the old all-time high region. So if we were to see a pre-halving retrace and we were to break beyond this new all-time high, that pre-halving retrace should occur in the next 3 weeks or so. And if we talk about this retrace, 51% in 3 days, once again, lower high, right? Lower high. And if we notice the 2012 cycle, November 2012 is when the halving occurred. So this was also a pre-halving retrace, which was very deep, very volatile, and it occurred in 3 days. So I don't think a crash like this within a short period of time is going to happen. Also on the less likely side, and of course lower macro, lower highs, so no rejection from old all-time highs. So it's very interesting to see how this old all-time high, and we're already making new all-time highs in this cycle, is confluent with this moving average on the pi cycle. And also technically we should be seeing a pre-halving retrace a few weeks before the halving, but history is suggesting to us that we should see that pre-halving retrace in 3 weeks time. So do we get overextension beyond here briefly for a few weeks before seeing a pre-halving retrace to potentially retest the top of this old all-time high region of 69k? that's one of the scenarios to take into consideration. Maybe a pre-halving retrace could last a month or so. And this sort of volatility, that kind of feels like it's a thing of the past. Whereas this is a retrace that occurred in the pre-halving year, so very unlikely in of itself. So some sort of combination of, well, this retrace being the most likely, but still, I wouldn't say that 40% is less likely, or more likely, apologies. Anything up to 20%, 25% if we're lucky. And over a period of 45 days, historically, these pre-halving retraces have occurred 45 days or so. If you look at the 2020 pre-halving retrace, then we saw this retrace take place into a consolidation region, which was multiple weeks, lasting multiple weeks. So something like this for a pre-halving retrace, but shallower and maybe a month or 45 days. This length seems to be quite reasonable nonetheless. So unlikely, probably also unlikely, and a shallower retrace, something like this would be likely, provided that this old all-time high isn't turned into new support. Because if this old all-time high is turned into new support, then we're going to continue to rally, and a pre-halving rally could occur in 3 weeks' time as per history. So that's about it for today's video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. Thank you so much for watching. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.